So, good morning, everyone. Our topic for today is all about finance. Finance, it is the science and art of managing money. So, it is on how you manage your money according to your needs, according to your expenses, and etc. So, there is two levels about the finance. First is the personal level, and then the next is the business level. So, in under the personal level, it is how much you will spend, how much you will save, and how you will invest your savings. Under the business level, how firms raise money from investors, how firms invest their money in attempt to earn a profit, and how they decide whether to reinvest profits in the business or distribute them back to the investors. There are also career opportunities in finance. First is the financial services. Under the financial services, there are financial services. It is the area of finance concerned with the design and delivery of advice and financial products to individuals, business, and government. Then managerial finance, it is concerned with the duties of being a financial manager working inside a business. Financial managers administer the financial affairs of all types of businesses, private and public, even large or small, profit-seeking businesses, and also non-profit businesses. So there are career opportunities under the financial services. First is the banking. We all know what is banking. Then is personal financial planning. So there are financial advisors who are trying to encourage the investors or the individual on how they can manage their investment or their plans for their future. For example, having a educational plan for their uh, students, for their uh, daughter and son in the future, and also applying for insurances in the future. So another is investment. There are a lot of investment, stocks, bonds, etc., etc. Then real estate. Real estate are those condominiums, housing, uh, lot, di ba? House and lot, and etc., etc. In insurances. So insurances is part of the financial services in which they can provide the security and life insurances. For example, in Manulife Philippines, they are offering some insurances for your security. When you die right now, your loved ones will receive money from your insurance. So like that. So under the managerial finance, there are what you call developing financial plan or budgeting. Next, extending credit to customer, evaluating proposed large expenditures, and raising money to fund the firm's operation. There are legal forms of businesses. Like in the Philippines, sole proprietorship is the main form of a business. It is all about the ownership of a business. Sole proprietor means sole, ibig sabihin yan is only one. Only one is the owner of that business. So partnership business is under the article of partnership, and it is unlimited liability. So you have a partner, uh, two business partners. Next is the corporation. Corporation is a large scale businesses which there are stockholders, there are limited liability, there are common stocks, and there are also dividends. So here is the organizational chart for corporation. The general organization of a corporation and the finance function, which is shown in the yellow. So the owners, or first is the stockholders. Stockholders are those people who bought shares in a company to be part of their company, or having an investment to be part of the company. So the board of directors are the owners and hires president for or the CEO or the chief executive officer who will manage all the transaction under their business. So under the CEO, there are vice presidents, a lot of vice presidents. Vice president for human resources, in which for the hiring and the selecting for the employees under their corporation. Next is vice president for manufacturing in making the products. So vice president finance or the CFO, the chief financial officer, in which managing the uh, the money or the in managing the preparation for the expenditures and etc etc. It is on how they manage their money. So vice president for marketing on how they will market their products, then vice president for information technology. So it is for their system inside the company. So under the vice president for financial or the chief financial officer, there are treasurer, and the other side is the controller. So the capital expenditure is under the treasurer, the credit manager, and the foreign exchange manager. As part of a big or a large corporation, there is foreign exchange manager because your business is multinational. It means that you are joining the arena for the stock exchange market. So under the treasurer, also the financial planning and the fundraising manager, the cash manager, and the pension fund manager. So under the controller, there are tax manager and corporate accounting manager. So what is the goal of the firm? What is the main goal of a firm? Maximize shareholders' wealth. It is the simplest and best measure of a stockholder wealth if the firm's share price. So that is the goal of a firm now, to manage and to have to maximize your wealth. Then a high share price will make shareholders happy at the expense of the customers, employees, or supplier. This is a common misconception. So, in investing in a corporate, it depends on what is the price of the share, and it is depends of the performance of the company or the corporation in the market. So it depends on the earning income of the corporation in the future. So they will give you a dividends for the amount you invested inside their company. So the goal is to maximize the wealth of the owners for whom is being operated. Yeah. That is the goal of the firm. So only take actions that are expected to increase the share price. The key variables that a manager must consider when making business decisions are return, the cash flow, and also risk. So in investing inside the company or the corporation, it is very risky because we didn't know if that company you invested in is having a positive performance or also in negative performance. So in maximizing shareholders' wealth, it is uh, showing in a figure 1.2 share price maximization, financial decision, and share price. So the financial manager is the one who will decide an alternative or an action. If it is having a return of risk or return for investment or having a risk. So in a as a financial manager, you need to know if the investors uh, will get or will sure the return of the ROI or the return of investment. So the financial manager will decide if the price will increase, then you will reject. Then if the price will decrease, so the financial manager will allow you to buy your stocks. Then you will sell it if the price will going higher. So that is the way on how you will get income in having a investment in a corporation. The stocks buying. So the maximized profit corporation commonly measures profit in terms of earnings per share or the EPS. EPS represents the amount earned during the period on behalf of each outstanding share of common stock, calculated by dividing the periods of total earning available for the firm's common stockholders by the number of shares of common stock outstanding. So here is the computation. Total earnings available for common stock divided by the number of share of common stock outstanding. So here is the example. Nick Dukakis, the financial manager of a Neptune Manufacturing, a producer of a marine engine components, is choosing between two investments. First is they are thinking for a rotor and a valve. The following table shows the EPS that each investment is expected to have over its 3-year life. So here is the graph. First is the investment year one and year two and year three as a total of 3 years. So under the rotor, for the first year, $1.40. So as you can see, it is much higher compared to the valve. So the next is the year two, $1 is equal also to the price of the rotor, and also the valve is equals to $1. So it is the same price. So in year three, the rotor have a lesser price, which is $0.40, and also unlike the valve, increases its price, so 1.40. At the end of the 3 years, the end of the year, so they choose the valve in which they can earn more than the rotor. It is much higher investment compared to the rotor. So in terms of the profit maximization goal, valve would be preferred over rotor because it is result in higher total earnings per share over the 3-year period. The $3 EPS compared with 2.80 EPS. So let's try this. On your assignment, Joseph Corporation was authorized to sell 150,000 common stocks. The following people bought shares with its corresponding dates. So shareholder A, B, and C. The number of shares at specific selling price is for shareholder, she bought 5,000 shares at 3 pesos per share. Shareholder B bought 25,000 shares at the price of 3 pesos. And also the shareholder C uh, bought 40,000 number of shares for the price of 3 pesos per share. Your assignment will be calculate the total amount of investment each investor paid, and also for the year 2017, the firm has earned 500,000 and has announced dividends of 200,000. So B1, which investor would receive dividends? B2, how much is the earnings per share? And B3, how much dividend will each investor receive? So maximizing profit, maximize shareholders' worth is equal to maximize profit. So does profit maximization lead to highest possible share price? So the timing is very important. The receipt of funds sooner rather than later is preferred. So as being a financial manager, you need to know how the price will be maximized. But it is all about the timing. Profits and cash flows are not identical. So profits are income, then cash flow, it is how the cash will flow inside your business. So risk matters are a great deal. Risk averse is investor expect to earn higher return on riskier investment, and they will accept lower returns on low risk investment. So if the risk is high, it means your investment will earn much higher compared to the low risk. So therefore, the primary goal of the firm is to maximize shareholders' wealth. So what about stakeholders' social responsibility? Business ethics and share price. An effective ethics program can enhance corporate value by producing a number of positive benefits. It can reduce potential litigation and judgment costs, maintain a positive corporate image, build shareholder confidence, and gain loyalty, commitment, and respect of the firm's stakeholders. So it is hard for being a corporation in encouraging all the investors to coming inside your company in which to have their loyalty and their commitment in investing inside your company. Managerial financial function, organization of the financial function. So as the figure 1.1, again, we will show the organizational structure for corporation. So the managerial finance function relationship to economics. So in marginal cost benefits analysis, Jamie Teng is a financial manager for Nord Department Stores, a large chain of upscale department stores operating primarily in the western United States. She is currently trying to decide whether to replace one of the firm's computer servers with a new, more sophisticated one that would both speed processing and handle a larger volume of transactions. The new computer would require a cash outlay of $8,000, and the old computer could be sold to net $2,000. The total benefit from the new server, measured in today's dollar, would be $10,000. The benefits over a similar time period from the old computer, measured in today's dollar, would be $3,000. Applying marginal cost benefit analysis, Jamie organizes the data as follows. So here is how it will compute it. So benefits with new computer, which is 10,000, less benefits with the old computer, which is 3,000. So the uh, the amount will be 7,000. The cost of new computer is 8,000, less the proceeds from sale of old computer, which is 2,000. Then the marginal cost will be 6,000. So the net benefit is so the net benefit is 1,000. You need to uh, the deduct the marginal benefits to the marginal added cost. So you need to try this. Marginal cost benefit analysis and goal of the firm Ken Allen Capital Budgeting Analysis for Valley Years Incorporated has been asked to evaluate a proposal. The manager of the automotive division believes that replacing the robotics used in the heavy truck gear line will produce total benefits of $560,000. Over the next 5 years, the existing robotics would produce benefits of 400,000, also in today's dollar, over the same time period. An initial cash investment of 220,000 would be required to install the new equipment. The manager estimates that the existing robotics can be sold for 70,000. Show how Ken will apply marginal cost benefit analysis techniques to determine the following. So A, look for the marginal added benefits for the proposed new robotics. Then B, look for the marginal added cost for the proposed new robotics. Then letter C, the new benefit of the proposed new robotics. Then also what should Ken Allen recommend that the company do and why? What the factors beside the cost and benefits should be considered before the final decision is being made.